This is Rod Kusin, Spoo Man for Risk, October 30th, 2009. If you've been watching our videos this week, this chart will look familiar. As we had mentioned 2 days ago, we did not think that the 1040 support level on the E-Mini S&P would hold, and we gave you the various reasons that we thought that. As of today, it clearly did not hold. We had one significant retracement after it broke that retraced back to the 1040 line. But as you know, when support is broken, it then becomes resistance. The 1040 is now a resistance line. What does this forebode for next week? It's hard to say. We did see some indication of potential retracement. Let me show you. As the market dropped today, we had gap information at 1064.25, 60.50, and around 46. We still have another gap below where the market closed today. Now that indicates the possibility, at least, of a retracement, but more than likely, I think, what we'll end up seeing is consolidation for a brief period. We could go sideways. We could rally back up. We may be able to reach these levels next week again before the market resumes a move down. To try to second guess exactly what will happen on Monday would be difficult. Now, I personally am of the opinion that when traders get a chance to analyze what happened today, they'll come to the conclusion that the probability that the market is going to sustain itself back up to highs that we saw earlier in October, they'll conclude that that's not going to happen. And instead, Monday could be a significant day where we see another 200-point drop or more. Just an opinion. We're going to have to read the market closely and just trade it according to how we see it at the time. We're not going to take a position and say, yep, the market's going to send off a huge sell signal on Monday morning. We're not saying that. It could, but we're not saying that it will. It's just a possibility, and I think it's a strong one. But this information indicates, yeah, we still got some room to the upside here. Now let's take a look at the VIX. This is a daily chart on the VIX. We're now once again heading back to those levels that we have talked about through the course of our market crash videos. There is something interesting about what we see happen today on the VIX. Now, we have nothing to suggest that there's any divergence here on the VIX. There obviously isn't. The VIX is hitting a new high, relatively speaking. But the VIX, the value of the DPO, again, if you've been watching our videos this week, we've been talking about the numeric equivalent of the color gradient on the DPO. And that color gradient today reached 65,535. That is a maximum. All right? Perhaps I used the wrong word for saying that. When I say maximum, it's at a maximum range to the downside. The lowest number that the VIX reaches is 65,535. The highest number it reaches is 16.7 million. So today, as it rallied up, it hit that number of 65,000. You'll notice that that didn't happen except for earlier in the month of October. And it didn't happen prior to that until the 1st of September. Prior to that, 17th of August. Okay? It hit a maximum number. It doesn't mean that it can't continue to go up. But what it does mean is that given that it's hit a maximum number, it could continue to go up on Monday and stay up there. That's one possibility. So the fact that it hit it once doesn't necessarily mean it's going to turn around and keep on going down, or at least temporarily go down. On the other hand, it could continue to go up and maintain this maximum number of 65,000. So, good reason to be concerned. Let's look at the gaps. Now, this is pretty interesting. Now, we have selected a 25 tick bar VIX chart. 25 tick bar VIX chart. And what do you see? You see that today, just before the close, the high gap on the VIX was hit, and it left gaps below. Ooh, very interesting. Very interesting. So what does that mean? It means we could see a turn on Monday, could rally up. It could. Will it? I don't know. And you don't know. We have to look at the facts. We have to look at the probabilities. Now, so far, we got the VIX hitting a maximum number, a low in this case of 65,000. We've got gaps below that were left today. This is a 25 tick bar chart. Does that mean that there's no gaps above? Depends upon the resolution. Okay? Because if we change this over and we cut the tick bar in half and use a 12, we do have gaps at 3207. Pardon me, 3208. If we take this to a 7 tick, which is our favorite, 7 tick, and we go back 10 months, oh yeah, we've got gaps up there. Lots of them. So what do we conclude? Long term, the probability is far greater that we're going to continue to move up than we're going to move down. But we could at least see some reattempt next week to keep the market from really crashing down. Monday's going to be a tricky day. Now, personally, I just think we're going to see an overreaction on Monday and that the market will drop on Monday. That's my personal opinion. I'm going on a hunch. There's just simply no way to really, at least for me, there's no way for me to really get a handle on Monday other than the general perception of the market. Given what happened today, I think we're going to have a negative perception on Monday. Let's see what kind of economic news is coming out. Now, Monday and Tuesday of next week, there's really not much in the way of releases. But come Wednesday, you've got the Fed rate decision again. That could really be significant. So, we'll have to see what Monday brings. But come Wednesday, oh boy, that could spell a very big move in the market. Now, that having been said, we just want to complete the thought by saying, for those of you that are trading the S&P 500, please visit our website. Visit RSKsys.com. Come ask for a free demo. We'd be happy to spend the time with you to explain what we're doing. And you too can learn how to more effectively trade the S&P 500. This is Rod Kusin and Spooman for Risk.